G'day, Paul from Small Crown Productions here, and welcome to the Business of Art. On this channel, I dig into all of the things that we need to help us build a business around our creative work. So tips, tools, strategies, interviews, mindset, whatever I can do to help share knowledge from people who know what they're talking about so that we can do business better and make money from our creative work. So if that is something you are interested in, please consider subscribing. This video is one in a series of over 15 videos relating to tax and finance for creative people in Australia. So this is specific to Australia. It is also general advice. Always, always, always seek specific advice about your situation in your region or country where you are. That said, there may be some general concepts that you can take from this and get some advice locally about whether or not it's something that would apply to you, no matter where you are. What I did was ask my creative network for a question that they would love to ask a tax and finance specialist, and then I bundled them all up and took them to Matt Tucker, the principal of Creative Crunches here in Brisbane. Creative Crunches is an arts-focused accountancy firm. Matt and his family and his team have been serving the artistic community here for many, many years. Matt's father used to own the business. Matt has taken it over since he retired, and they know what they're talking about when it comes to Australian tax law, tax and finance for creative people. But again, general advice. Always seek specific advice to your situation. Matt was super generous to donate his time. I cannot thank him enough for taking the time out of his day to actually sit and answer these questions for us all. So with that, let's dive in to today's question. So question one, what activities can creatives claim on tax?
Yeah, so really this is it's almost open-ended. The type of activity that a creative gets involved in, any of that is potentially claimable. So what the ATO really has to say in this space is they've got a position on whether someone is in business or as a hobbyist. And those two things are obviously fairly different, but there's a juncture at which one ceases and the other one starts. Yeah. And all the ATO really says to taxpayers across all industries really is once you are engaged in activity where the way you conduct yourself starts to tip into this way of being in business, then that is the point at which you can start thinking about claiming for expenses, from a business perspective. And once you tip into that, then the nature of what becomes claimable is actually pretty broad. So again, the general deduction provision in the Tax Act basically says if you've spent money either directly earning a little bit of income, or if you're in business, you've spent money what they call necessarily incurred in running that business, then the prima facie rule is that expense will be claimable against that income or claimable in the context of running that business. That means that it's a very broad set of possible expenses, and what might be deductible for one person is not necessarily deductible for another, and that's because everyone runs their businesses differently or to different extents. Yeah. So we always say to clients, everyone wants to know what can I claim, and I think they're almost looking for an alphabetical list of what is in and what is not, but it's not actually like that. The test that they need to be looking at every single day is, am I spending money here, and can I relate that to my business, or am I spending this money in relation to a job that I'm doing and income that I'm earning? If the answer to either of those questions is yes, there's a connection, even if that connection is just in part, they should be keeping those records and aiming to claim.
Great. So thinking about if I'm making phone calls, going to an audition, going out and having a meeting with someone that I've got to pay for parking for, little things like that, all claimable because it's an expense incurred in the process of trying to win or execute business.
Sure. Yes. Now, in the world of tax, this is what keeps me employed, is that there's always exceptions to these rules. So even in the context of some of those examples, going and having meetings, this is actually a great big area that lots of people have questions on. Mm-hmm. Can I claim my coffees? Can I claim my lunches? And even in that area, so what we would say to clients is, the first thing that they should be doing is making that connection. So if they're just going to lunch or like a cafe, whether it's a lunch or a small meal or a coffee, what they first need to be doing in their mind is making that connection that I'm spending money here and it's related to my business. My accountant told me I should be keeping receipts for this, and they should. So they need to train themselves to be always thinking this way. Now, once you have trained yourself that way, that you're always grabbing every possible little thing, the next stage of those habits is to, I guess, bring it back in those particular areas where the tax office does have certain other things to say. So in the context of going out and entertaining clients or having those business meetings, a lot of people will, not necessarily confuse the two issues, but the ATO has a position where they say if the meeting is just like a light refreshment, something like a coffee, that's okay. But if it goes further and what you're actually doing is what they call entertaining that client and trying to win business, and often it does go into that realm where it is beyond just a coffee or what they call a light refreshment. It goes into a meal. It's something more substantial. Maybe there's some wine and that sort of thing. Not that alcohol is necessarily a problem, but if it goes into that concept of what they think is entertainment, then entertainment is broadly not deductible. And so it's still a good idea for clients to be thinking in these broad terms and trying to collect all the information that's possible. If there's some things that come out at the end of that, a couple of things that are struck out, so be it. That's the same rules for everybody. But that broad rule is more important, because unless clients are really getting into the habit of trying to keep everything and make those connections, even if they're in part, it doesn't develop those good habits, and that's when stuff actually starts to get missed. The small bits, that they might just, it's a cafe and it's a light refreshment, it's a coffee, I won't bother about it. But if you're doing that 50 times a year, it all has the tendency to add up, and that's just 1 year. That's a habit that is going throughout their entire career. That's year after year after year. So all of that adds up, and we're bean counters. So the important thing is like grabbing everything.
There we go. Thanks again to Matt Tucker from Creative Crunches for taking the time to answer these questions. If you have a tax and finance question of your own that you would like to ask, please pop it in the comments below and I will do everything I can to get that answered, or link you to one of the other videos where it may already have been asked and answered. Also in the description below is a link to the playlist that contains all of these tax and finance questions, so you can dig through there and see if your question has already been answered. And of course, it would be fantastic if you could like this video, subscribe to the channel, but most importantly, if you got something of value out of this, there is a good chance you will know somebody else who can as well. Please share it with them, tag them in the comments, whatever you've got to do, pay it forward so that we can keep helping each other out. Thanks very much. I'll see you on the next one.